look, it's always easy to make excuses. It's a quiet time of year. It's summer. It's hard to move the ball forward. Excuses aren't going to get anybody anywhere. And you've got to, as a startup founder, be pushing the ball forward and pushing the envelope at all times, 365 days a year to the best of your abilities. So it's just a question of looking at the reality of it.
This podcast is sponsored by Pragmatic Solutions, the player account management platform chosen by today's smart betting and gaming operators. Don't let technical constraints delay you from achieving your business goals. Expand your business, boost your margins, and dominate the market in any leading regulated jurisdiction with our powerful, flexible, and secure iGaming platform. Enjoy its extensive marketing tools, compliance protection, real-time data, and a wide portfolio of over 1,000 industry providers. It's time to upgrade your technology. Let Pragmatic Solutions show you the modern approach. Visit pragmatic.solutions and join the smart thinkers.
This podcast is brought to you by Pragmatic Play, a leading game developer providing player favorites to the most successful brands across the industry. With an award-winning multi-product portfolio of slots, live casino, bingo, virtual sports, and more, Pragmatic Play is powering up new possibilities of play through one single API. Visit pragmaticplay.com and discover your favorite every time.
Bingo, bango, bongo, my friends. We are back here at the Vested Internet Podcast Summer Edition today. First and foremost, Benjie, where in the world are you? How is everything going?
Everything's good. Just made my way back from Europe to North America and ready to roll.
All right. What about you, Lloyd? You have a big smile on your face today. What's cooking over there?
I have a big smile on my face anytime Benjie and I are catching up and hanging out. So nothing else specific to report.
All good. All right, guys. So we have a really interesting agenda in front of us today with some 3 high-octane topics. And to kick things off with, we are in June now, of course, and summer in the business world often gets dismissed as a slow season. People are on holiday, decision makers are harder to reach, momentum can feel a little bit sluggish. But for scrappy startup founders, this can be a good opportunity. So, Lloyd, I want to kick off today's podcast with a question to you. How can you actually move the ball forward during the summer months as a startup founder?
I was hoping you would start with Benjie because I feel like my answer is a bit more of a non-answer. But maybe just to go through my thoughts, at a high level, is it true that there is some seasonality to the velocity of decision making at investment firms and large corporations? Almost certainly, yes. I think, of course, that is the case. But it's quite hard to really thread the needle. Yeah, summer can be slow, but then people's kids are going back to school, and then suddenly it's Thanksgiving, and then it's Christmas, and then it's New Year's, and then people's kids are going on spring break, and suddenly it's the start of the next summer. And I think when you're talking to smaller firms, talk to someone like myself, I'm a solo GP, we're open for business. You should see our calendar today. My bandwidth is more likely to be impacted by things in my personal life, probably, than it is by the seasonality of what it happens to be. And there are many other small firms where I think that's also the case. The other thing that I think is complicated is sort of, as you alluded to, it may be that there are fewer decision makers in the office or on Slack, per day or per hour, but other startups might also be on vacation and a bit slower in various ways. And so it's not really clear to me when the supply-demand dynamics favor a startup more or less. Is it the summer or is it elsewhere? Because, yes, during the summer, maybe there's fewer people taking calls, but maybe there's also fewer making. And so that's why my sort of non-answer here is I think usually the best bet is to just play your game, whatever that game is, and get really good at that. I would rather go to a VC firm during the summer when my last 3 months were 100% month-over-month growth than I would during the winter or the fall when I'm not as steep of an inflection point. And so I think it's a good question, and it's always good to think about, are you timing things well? Could you be making your life easier? But often I wonder if on this question, people over-engineer a bit too much, and if they wouldn't just be better off playing their game, making sure their company or their value proposition is so attractive that the metrics are so attractive that they just can't be ignored. And I think many of the other things fall into line.
Yeah, I've got some thoughts on that. Yeah, I'll add to that. I have some thoughts to add there. So look, I agree with the component that as a founder, you've got to play your game, right? You've got to keep the ball moving and you've got to do what you're going to do. You can't be overly concerned with where you are in the calendar. There's always going to be folks busy with certain things at different times of year, and you got to be the best version of you and the best version of your company you can be. To Lloyd's point, make your value proposition so compelling that it can't be denied, be it from investors or be it from B2B operators, if you're providing a B2B product, or be it on the B2C side from the masses at large who are going to be consuming your product. You got to play your game. But you've also got to know your audience. It depends where you are in your life cycle as a company. Let's say you are a company offering a B2B product or service, and now you're going into the summer months where folks are taking time off and you got to get your product integrated. And a lot of the IT people that are going to be integrating aren't around. And, you're supposed to have a call with somebody and now they're on vacation. So I think that in the summer months, maybe a little bit more so than the rest of the year, you've got to be sensitive to these dynamics, sensitive to timing, and be super disciplined and super organized and ensure that you're super communicative in regards to understanding everyone else's timelines and everyone else's schedules. And you should always know that. Like if there's a key person involved in an integration of a product who's spearheading that on the part of a B2B operator, you should know when they're going on vacation. You should know when they're taking the long weekends. You should have that level of rapport where you have that understanding with one another and that level of clarity. But I think in the summer months, it's important to be doubling down on that. And also internally as you're growing your company with your own staff. I recall in my operational days back in the Don Best days, and we were gearing up in the summer months for football season, and you got to get people to take slots of time off during the summer months when their kids are off at school, and you got to be super organized about how you go about that. And for your key people, we used to look really closely at when is that all-star break so that people can take their time off. And on the flip side, if you're raising capital, and you're in the midst of a cycle and working with specific VCs, I think it's important to the extent possible to build the relationships and have the compelling value proposition, but to know what their availability is, to be candid about it. Here's my availability in the month of July. What's yours? And now you know what it is, and get those calls on calendar and get the follow-ups in place, and just make sure that you're a little bit more cognizant of people taking time off in the summer months, because people are going to be a little bit harder to reach. And those long weekends in particular, you don't want to be reaching out to somebody blind and cold for the first time at a Friday at 3 p.m. heading into a long weekend.
Yeah, I'm curious to bounce kind of how we do things at Next, to see if that resonates perhaps with some of the startups that you guys are involved in as well. So we are a cyclical company, right? In the event world, we have most of our big shows at the first 5 months of the year. And then summertime for us is a bit of a lull time in the company. And we noticed this in previous cycles, that in summertime, it's hard to keep the motivation up within the organization between the employees. It is summer, people have their eyes somewhere else kind of thing. There's a lot of plans and trips and holidays and so on and so forth. And we were thinking a lot about how we can keep the energy high for when you are actually in the office, right? So even though our staff will take more vacation, when they are working, we obviously want the most output as possible from them. And we implemented something last year that we are strengthening this year that works really well for us. And that is that we go into summer with June, July, August as our kind of planning months, where we introspect more as a company of what are the successes that we've had in the last cycle, let's say, in the last yearly cycle, and what can we do to improve for 2026 and onwards. So we think about Next New York, workshops during June, where we talk about how to strengthen that event. And then we go into July, where it's like budget negotiation between the team, what we actually will do. And then the idea is that we want to have a finalized plan that we launch to the world on the 1st of September, right? That date is like our iPhone launch date, if you will, where we launch all the plans for the coming year. And that kind of enables us to go into a period where we are really focused and we have deadlines. So there's a deadline every second week that our team needs to adhere to. And we find that that's a really great way for during this time where it's like, as I said, there's a lot of the eyes are going elsewise, to keep people engaged and to keep people at 100% output when they actually sit at the office. I don't know if you have similar examples of companies going into similar kind of strategies and cycles just to kind of improve and to become a bit more structured when we go into this type of period?
I think some of that's a little unique to the conference business where you have such seasonality. I suppose in the sports betting business, for many people in the US, for example, the September period leading up to and right before NFL season starts is maybe the closest equivalent to that. But of course, you have many other sports and playoffs starting throughout the year. The one thing I'll just mention there that does resonate, a lot of people, a lot of startup founders like to debate the pros and cons to publicity. It's nice to see your name up in lights, but sometimes it invites unwanted attention and increased negotiating leverage from your suppliers. I do find that employees love to see a nice announcement and see their names up in lights. And you mentioned kind of putting something out and announcing, the next year's plans. And we do find that sometimes one of the underappreciated benefits of doing announcements, whether they're interviews and earned media or things you post on your blog or post to your own social channels, is I do think that's something that employees do value. It can be hard when you're working at a startup and you're toiling away, and it's not always so easy to see what impact is your work having on the company and on the world. And so I do think in terms of keeping motivation going, whether it's in the slow months or otherwise, some good media coverage, I think, can often really buoy the spirits of a team that maybe otherwise is in the slog of, a challenging sales cycle.
Yeah, look, I think a lot of it's, Pierre, what you allude to with your company is specific to you. It's situations, and I can tell you that you guys do it well. Before we began filming this 2 hours ago, I was on a call with one of your staff members who reached out to me 2 weeks ago, cognizant of it being busy time, the slower summer period, when are you available to have a call? That was 2 hours ago, right? So
good to know that they're working hard.
Yeah, well, whatever it is that you're implementing, you and your staff are doing it effectively. And I think that's kind of the point that we're making here is that, look, it's always easy to make excuses. It's a quiet time of year. It's summer. It's hard to move the ball forward. Excuses aren't going to get anybody anywhere. And you've got to, as a startup founder, be pushing the ball forward and pushing the envelope at all times, 365 days a year to the best of your abilities. So it's just a question of looking at the reality of it. Look, if you know that you're looking to raise capital and you've got a certain individual who's a key person to speak with, who lives out in whatever city and he spends his summers up in the cottage, and you're aware of that, you got to work within that dynamic to find the right time to connect with that person. You know that person's back in town for a couple of weeks in July, but away the rest of the summer. Those are the 2 weeks you want to pounce. So you just got to be aware and work within the reality of the situation of your organization and have as much knowledge of what's going on around you as you can.
Yeah, absolutely. I just find out that specifically when you go into these lull periods where attention tends to go somewhere else, that the best way to combat that is to align around a really strong goal, as an organization that listen, we know it's summer, we're going to go on vacation left, right, and center, but in our case, we call it the 1-9 drive. Okay, we have that big goal ahead of us. There's deadlines along the way, and that just kind of brings people together. So I do find, regardless if we are conference workers or not, but when an organization goes into that lull period, it's just good to kind of have some form of goal in front of you that keeps you kind of focused and motivated as an organization.
I hear what you're saying, Pierre. One last comment there is, if I'm investing in a company, I would hope that the phrase lull period isn't really part of the equation for the company I'm getting involved with. In those early stages, those first couple of years, or every period is critical. So.
Absolutely. Couldn't agree more, Benjie. Okay, going into the second point of today, let's shift gears to something a little bit different, which is skill-based gaming. Right, it's another segment of the industry that is not something that we usually deal with, specifically within the online gambling context or the sports betting context. It's a separate bubble that lives in a separate world that sometimes have some interesting crossover to our industry as well. But I want to raise the question and the topic today. What's something new? What's happening in that space? And so, Lloyd, maybe starting on your side once again here. What's something new that is happening in skill-based gaming today?
Yeah, I don't know if I view them as separately as you do, and it's interesting. Perhaps in different markets and perhaps in parts of Europe, it's not become as popular in others. To me, many of the so-called skill-based gaming apps, at the very least, are substitute products for other forms of gambling or casino, in that they allow people to risk money on uncertain outcomes and usually have some interactive features where the user is exerting some level of skill or influence over that outcome, but in a way that I imagine targets almost the same, if not a very similar audience as to traditional iGaming and sports betting. I think in the world of skill-based gaming these days, certainly companies like Papaya really paved the road and are probably some of the most successful companies in the space right now. We've seen a lot of interesting efforts to, for example, allow people to bet on popular video games, whether it's betting me and you, Pierre, playing FIFA or Call of Duty against each other and wagering on the outcome, or maybe playing against the house and having odds determined by your own history. Similarly, we're seeing efforts at driving ranges and bowling alleys, for example, to enable people to bet on their own performance and or bet against their peers. And for us, I think we're most interested in particular in some of those betting on yourself dynamics that can't really be replicated just by having a few buddies and a Venmo account. But I think probably the fastest growing segment of this space is what someone might call, I don't know, maybe the hyper casual real money skill-based gaming companies. In our portfolio, we have a company called Triumph. They used to go by Triumph Arcade, and now they just go by Triumph. Triumph is the #1 ranked app in the App Store in the casino category right now. The App Store considers them to be a casino app, and if you go in the iOS store, you will see they have more downloads and better ratings than any online casino or any other online gaming company, such that now for I don't know how many weeks running, they are the #1 app in the App Store under the casino category. It's harder to describe. I would suggest people just go check out the Triumph app yourselves. I think the guys over there, frankly, build better games with better haptics and micro animations and level progression and user retention loops than any multi-billion-dollar gaming company or game studio that you'll find. And they've done a really great job doing something that reminds me what Justin Park at Betty did in the online slots for Ontario world, which is not only build a great consumer-facing real money gaming brand, but do it in such a vertically integrated way that you really own end-to-end the consumer, from the moment you serve them an impression to the moment you pay them out on their last dollar of their winnings. You own the entire tech stack, and that tends to, I'm noticing a pattern, invite just a much higher degree of customer satisfaction and better retention and better unit economics. So if you haven't heard of Triumph already, stay tuned. You will for sure, based on how fast they're growing and where they're at in the App Store. And I think more broadly, you should expect to see more of these so-called hyper-casual, skill-based real money games, which do not require licensing by a gambling body or the payment of GGR taxes, but in many cases do fill the same void or serve as a substitute product for adrenaline-seeking, risk-taking, casino-adjacent users. So we definitely think skill-based gaming is a topic that has come and gone many times, and where different amounts of hype have and have not been lived up to. We think this current iteration of these hyper-casual games, especially a la something like Triumph or even something like a FanDuel Face-Off, which would also, I think, fall into this category, are areas with a good amount of growth still yet ahead of them.
Yeah, thanks for that, Lloyd. I think it's really interesting because I touch upon one point that you've made, that skill games have kind of come and gone on a couple of different variants over the years. And it's not a new topic. That begs the question as to why, and of course, Papaya is a massive success, but it begs the question as to why there aren't more massive successes today, or a lot more massive successes today. And it might just be that we're still tinkering with the formulas and tinkering with the markets where this is gaining acceptance, and just figuring out what works and what doesn't. And you allude to the company Triumph in your portfolio as being one that's now finding its footing. We look at a company, companies are still up and coming and trying to figure it out. You look on the casual gaming side, I've been paying attention to a company that you might be familiar with called Bring It On, which has their kind of moat is offering more of a VIP experience to go after not just the casual players, but to offer VIP hosts for those that are more committed players and playing at a higher level. And I think that they're beginning to see some traction, and they're one that I'm keeping an eye on, even though, from a metric standpoint, they wouldn't be anywhere near as far along as a Papaya or arguably a Triumph. And then you look at some of the ones that we might be familiar with, a company like Even Play, which previously was switched their name from Skill Money Games. And I think what's interesting there is that they're kind of what Even Play does is they offer sports simulation, their first product being golf, that allows you to take what you might see in a Top Golf and recreate it at home on a P versus P, playing against other players in the comfort of your own home. And I think that becomes interesting if they can get it right, because it's multidimensional in that you have the components, which is within the venues, with the growth of these venues kind of driving the interest to what then can be played within the comfort of your own home on a player versus player mechanism that can be tracked. So I think that those are a couple of companies that I'm keeping an eye on, in addition to Triumph, in addition to the continuing growth of Papaya and others.
And I suppose the exciting opportunity with skill-based gaming is the fact that you aren't required to get any form of license, right? And that becomes then the opportunity to unlock a much wider segment of users and not have to go too deep in compliance-related issues and so on. So, I remember back in the day, as a former poker player, that's how I started my career, which was always something that we were legalizing for in Sweden we were obviously lobbying in Sweden to try to legalize poker by classifying poker as a skill-based game. It wasn't successful, but then on the other hand, you have a game like backgammon, for example, which is not too unsimilar to poker, which was classified as a skill-based game. And then, of course, the result of that is that you were able to organize real money tournaments in backgammon to whoever you wanted, but of course not in the poker context. And I suppose that is the big opportunity in this vertical, in this niche. And I'm curious to ask perhaps Lloyd, you are deep in the space from an investor point of view. Do you see that like kind of as the big opportunity in the future? The fact that you, as a startup, you don't need to worry too much about licensing or which geos you can operate it and so on and so forth? Or is it more restricted, perhaps, than I'm imagining right now?
I mean, obviously, the funny thing is, in most industries, most startups do not worry about geographic restrictions. They just worry about product market fit and whether consumers will have demand for their product at the price that they want to sell it. I mean, certainly similar to sweepstakes, one of the attractive points about a skill-based gaming go-to-market strategy is that it is quicker and cheaper and less regulatorily burdensome. And then on the back end, the margins are more favorable because you're not paying state GGR taxes. As I was alluding to a bit on your first question with the timing around the summer, of course, that also means that there's lower barriers to entry for your competitors as well. And so that's always, a challenge, is that you're going up against others. But yeah, look, in the US, there are 3 different tests that different states apply, some less, some more strict. In some states, a game that has any element whatsoever determined by chance will always be considered gambling. In other states, only if a material element of the outcome is determined by chance is it considered gambling. And in other states, only if the predominant factor in the outcome is chance is it considered gambling. And so you could rank poker or backgammon or video games or chess or something, on those different weighing machines and see where you come out. But there is pretty strong precedent in not all 50, and I'm forgetting the number, 39 or 43 states in which all of these skill-based gaming companies currently operate. In other countries, there are other frameworks that do and do not allow for that. So yes, I think the idea of being in more fertile ground to reach product market fit without having to go through the costly procedure and time-consuming procedure of obtaining licenses and paying gaming taxes is certainly a point of attraction, and why some of these companies bring it on, which Benjie mentioned, which took the Papaya model and really only made a very slight tweak, which is to say we're going to focus a little more on VIPs. And even they, out of the gate, grew quite quickly, probably much more quickly than your average B2C online casino startup that would have spent those same 12 months, getting licensed and being compliant in the first place. So no doubt that is an attraction point. And in my view, I think the skill-based gaming carve-out is at least as strong as that for sweepstakes and other routes to avoiding the licensing and taxation procedures.
And two last points I'll make on this, Pierre, is one, it'll be really interesting. Lloyd alluded to a little earlier how FanDuel has come out with a product along these lines. And it'll be interesting to see as this category grows and as more companies experience success in the space, what the M&A path looks like as it pertains to, do regulated operators have an interest in these products? I think the answer is yes, but time will tell as we see going forward. Then the other component is this isn't really just a U.S. story at all. It's a global story. No shortage of decks that I'm seeing, not that I'm paying that much attention to them, coming out of India for this category, right? So it'll be interesting to see where the products come from, where the product distribution is, and what the impetus is for the motivation of these products in different countries.
Yeah, on that note, I find actually it fascinating how few people I talk to at the conferences that we all go to that are even aware of FanDuel Face-Off, let alone have actually spent time playing on them. I believe that's a joint venture with Game Taco or World Winner, if I'm recalling correctly, where FanDuel did not build the underlying game infrastructure, but they layer on a bunch of their IP. So you can play, Rob Gronkowski cornhole toss. FanDuel did not design the underlying cornhole digital game, but they do have a spokesmanship deal with Rob Gronkowski, who they layer on there. And so I agree. I think Benjie's point about is quite astute. How are other operators viewing the space? Do they view it similar to how DraftKings looks at online lottery, for example, as both a new source of acquiring customers and a new revenue source from cross-selling existing customers? So I do think we should see, especially as the sweepstakes and prediction market stories play themselves out, should see it interesting to find where do some of these skill-based gaming companies land, and is M&A one of the paths by which FanDuel's competitors launch products similar to FanDuel Face-Off?
Seems to be a great opportunity for the operators to launch a separate tab with skill-based gaming essentially in the future, and FanDuel is taking the first stab at that perhaps at the moment. Really interesting to hear the thoughts on that. The last topic of today, the third topic of today, is within the affiliation side of the industry, and it wasn't that long ago that affiliate businesses in the online gambling industry were seen as cash-generating darlings, especially during the rise of the US online sports betting saga. Often bootstrapped, fast-growing, highly acquirable, but that shine has somewhat dipped. Multiples are down, roll-ups are under pressure, and even the biggest players are feeling the squeeze. Bet the Collective is down 40% in the last 12 months. RakeTech down 70%. Catena Media down 67%. But perhaps the light on the shining hill is our friends over at Gambling.com Group, who's actually up 50% in the last year, with Charles Gillespie, who's been a visitor here at the podcast previously. So, Benjie, my question to you is, what is the outlook for M&A in the affiliate space? And just in general, how do you see the affiliate space at the moment? And what are the opportunities and struggles moving forward?
Yeah, look, when Bob Dylan wrote "The Times They Are A-Changin'," I didn't realize he was talking about the affiliate space within the gaming sector. The times definitely are changing, and it's been a bit of a struggle for these guys. And look, Better Collective has ruled the roost for a period of time, and I'm not sure exactly what their strategy is going forward. They obviously need to, in some capacity, recreate themselves in regards to their go-forward strategy. But, if we look at the history lesson on this, is that you got to be a little bit careful when it comes to acquisition, right? And just acquiring a bunch of companies and trying to bolt them together and make them fit and make them work often isn't the best long-term strategy. And I think that not to say that's entirely what Better Collective has done here, but it's pretty clear now that some of these acquisitions have created challenges for where they are right now as an organization. And, what is the answer going forward? I think there's a few answers to that, but part of the answer is in how you described it, Pierre. You talk about Gambling.com being the one outlier here. Their stock price has improved in the last year, and they've been a little bit more strategic or methodical in terms of how they go about acquisition. They made a big splash with the acquisition of OddsJam earlier this year. And I think that part of the answer is diversification of revenue stream away from what has always been perceived as traditional affiliate revenue into other tracks of complementary affiliate revenue. And the Optic Odds acquisition, I think, ticked some of those boxes for Gamb, in that they were bringing in some additional affiliate revenue, yes, but they were bringing in a boatload of subscription revenue and even some B2B revenue. Right now, clearly, I'm not necessarily answering your question, because the B2B revenue that they brought in of Optic Odds, which is a subsidiary of OddsJam product being sold to operators, isn't quote unquote affiliate revenue, but by and large, Gamb is still viewed as an affiliate company, and now they're bringing in some ancillary revenue streams to grow as they sort out what the affiliate piece will look like going forward, and also recognizing that the market as a whole doesn't necessarily, within the public markets, value those affiliate revenues the same way that they used to. So that would be part of my answer to your question, and I'll stop there for now.
Sounds to me like there is a perfect correlation between affiliate CEOs appearing on the Vested Interest podcast and their stocks going on to outperform the broader market. So that's really all I took away from that. My thoughts, only to add to what Benjie said, quite on point as always, are that I think there's two main factors leading to the challenges that Benjie described and that, Pierre, you previewed to us. One is that there just simply are not a ton of new states opening for sports betting or iGaming at the moment, and new state openings really are the gold rush for an affiliate. In an area like gambling, where it's not a new market, you're not actually educating new customers. You have millions and millions of built-in, pre-educated, pre-baked customers waiting to find the best odds and the best promos on day one. When you move from just an absolute wealth of opportunities like this to a complete paucity of them, that is, I think, incredibly challenging. And then second, and I think maybe more subtly, but the younger generation especially, their behaviors are shifting. With the advent of LLMs like ChatGPT, for example, people are going to chatbots more often for where are the best odds, where are the best promos, what should I bet on tonight. Authentic types of content that really engender a true community that people feel a part of. Barstool Sports seems to be the prime example of this. Within our portfolio, Almost Friday Media, who are the owner of Friday Beers, and they do the same thing with MGM that DraftKings does with Barstool. We see both MGM and DraftKings doubling down on their Barstool and Friday Beers relationships, respectively, because those are very unique, authentic types of highly resonant content that aren't really susceptible to changes in SEO dynamics or how people are searching and discovering their bets. So I think the rise of chatbots and LLMs, whether they are the one that FanDuel has embedded on its own site or some of the B2B ones or some of the direct-to-consumers that are offered, as well as people spending more time in these communities that are not susceptible to SEO optimization and just blanketing the internet with as many articles about odds as possible, that's making it tough for some of the legacy affiliates. And I think some of the more forward-thinking ones are already looking at, should we build a chat bot on top of all of our historical content and allow people to interact with that directly or try to get in on that trend? Or similarly, Better Collective, certainly, I think when they acquired Playmaker, I think had a lot of this sort of Barstool, Friday Beers type content and community in mind. So I think still TBD, what happens with the whole chatbot user flow and how does that disrupt traditional search behaviors and traditional affiliates, and also some of these more community-focused short-form content platforms. Those seem to me to kind of be edging out the traditional affiliate guys, especially in a world where, as mentioned, there are just not as many new state openings that are the gold rushes that have had kept those companies growing in their golden era.
Yeah, it really does seem like the affiliate niche is in a little bit of a dire strait to some extent. I mean, just to provide some more context, what happened about a year ago with companies like Better Collective and all affiliates essentially is that Google released this major update, that really shook the foundations for some affiliates, but not everyone. And what happened essentially is that a lot of these really big players like Better Collective and others had made these really big media partnerships. So in some cases, they made some acquisitions in the media space where they would strike a partnership with, say, New York Post or a big sports coverage website and whatnot, and conduct affiliation through those websites. So that's what's called parasite SEO, where essentially you get the users that are interested in sports betting to read news about sports, and then you try to connect affiliation from that website into a DraftKings or into a FanDuel, for example. Now, Google doesn't like that. Google doesn't like the fact that there is that connection between reading about sports and gambling, for example. So that's hence the term parasite SEO. And those are the sites that were severely punished. But then, as you point out, Lloyd, the sites that, on the other hand, did really well during that period were organic sites that were not shy of the fact that they are attracting a sports betting audience for sports betting purposes, let's say. So then the connection between, let's say, like talking about sports betting and sending a play to DraftKings is much more organic, let's say. So some of those sites did really well during that period, whereas most of these media partnerships went from being highly successful to essentially dying overnight. But then there is, yeah, please.
Yeah, I mean, Pierre, what I would say to that is if you're operating, whether it be a startup or an established publicly traded company that's achieving success and making acquisitions, you've got to hope for the best, but plan for plan for the worst, so to speak. And you've got to be able to plan for, in some capacity, those eventualities and or possibilities coming to fruition. And you've got to be able to hedge your bets. You can't have too many eggs earmarked in one basket versus the other.
Yeah.
I think as a company, you need to be able to not necessarily anticipate what Google will be doing because you can't predict that. But you've got to be aware that if they make change A or change B or change C, here are the potential implications for us and our revenue streams. And what can we do today to get ahead of that curve if one of those three things is to happen? And the more that you can foresee it and the more that you can get ahead of that curve, the more that you can hedge your bets as it pertains to diversification of revenue stream, the less susceptible you are to falling off a cliff if something happens.
On that note, I think it's quite telling and interesting to note that, look, Benjie and I both know the leadership at many of the affiliates especially as well as the heads of corporate development and strategy who are looking at M&A there, and none of those guys are necessarily ones I would ever want to bet against. But that said, without getting specific, I note that many of the new age companies that are starting to eat the lunch of the old affiliates, whether it's B2C chatbots, B2B chatbots, more authentic organic content, they tend to be helmed by guys who previously were at larger affiliates or who had affiliate startups in the past and sold them to Better Collective and Catena and then realized that it was going to be too hard to advance their vision of the ever-changing future in a large organization and decided to do it at a startup in a small organization instead. So perhaps that's just an indictment of like an innovator's dilemma in a corporate culture. But I think it's quite interesting. Most of the companies that I see that seem to really be eating the lunch of the old traditional affiliates through these new user flows, they're not founded by people from completely different industries. They generally are people who made their money in affiliate and have actually seen a lot of the writing on the wall and seen some of these changes evolving. So it will be quite interesting to see if those are the ones or if the ones helmed by folks from completely different industries are more successful.
Yes, absolutely. And the example to bring up here of you talk about not putting the eggs in one basket, Benjie, is of course Catena Media, who from its peak back in 2021, when they committed themselves to a US-only strategy, have since decreased their market cap by 98%, right? Like Catena Media used to be bigger than Bet Collective. It was the number one affiliate in the world. When the US opportunity opened, they decided to focus everything that the company had on the US opportunity. They sold off a lot of assets that then went on to do really well, like Us Gamblers, which is that community platform that is really popular today. Of course, the US market dipped after no more state openings, and Catena Media today is a footnote in the affiliate space. Now, the last question here today, and perhaps jumping over to Lloyd on that first. You mentioned earlier, the advent of chatbots and LLMs, and traditional SEO affiliation has previously been predicated on the fact that people are searching in Google for what is the best online casino, and you are presented with results from affiliates that then directs you to specific operators. Now, in that context, when people are now starting to search in ChatGPT, what is the best online casino, how does the affiliates fit in that new brave world, let's say.
Yeah, probably not enough time to cover now other than to say there is a whole new world of LLM SEO. How do you optimize your website and your content in any industry to show up and be cited as a source and as a referral on an LLM rather than in a Google search? And that's certainly a major evolution. And then we're also seeing whether it's, FanDuel or other companies I won't name just yet that are building their own chatbots or building a chatbot on top of a Action Network style platform or on top of a historical affiliate. There's a lot of different angles that we see folks taking to it, but there's no question that the one thing you can't do is what you were doing 10 years ago. You can't just blanket the internet with as many websites as possible that have the right keywords and link to odds and possible links to DraftKings and FanDuel. That is definitely not going to work anymore. I'm not smart enough to say exactly what will, but I can say for sure that it won't be that.
Any final comments from you, Benjie?
No, I concur with what Lloyd says. If you're a startup today, you've got to look at not what have we been doing for the last 10 years in the affiliate space, but what will the affiliate space look like in 3 to 5 to 10 years from now, and try to forecast where that will be. And, within your startup, build out the dynamics, taking into account LLMs, taking into account the growth of AI within the infrastructure, and then combining that with the traditional metrics to come up with your strategy as to what your company can be going forward to become relevant in this space. And look, it's also unclear on the M&A side who will be the buyers of some of these companies in 2, 3, 4 years from now. Will it be some of these new companies that build up that become the buyers, or will some of the incumbents who have historically dominated the space, who, to Lloyd's point earlier, are led by tremendous leadership, will they have the ability to reconfigure, retool, and take back the thrones that they've occupied for the past 5 years?
Brilliant. So just like Google needs to rethink their business model in this new context of LLM-based searches, then of course affiliates need to adapt to this as well, and that is perhaps the big opportunities of the next generation startup founders. Lloyd, Benjie, it's been another fantastic edition of the Vested Inter podcast. Thank you so much. Don't have too much of a lull period now, guys, and I will see you here in a couple of weeks again.
Thanks, guys.
See you soon.